Good afternoon, everyone. I'm Piyush Bhandari, your accounts teacher. Today, I'm here with another topic of accounting, that is, the basic accounting terms. So, the focus of presentation will be on the introduction of the important accounting terms. So, let us start. In the world of business, there are certain terms of accounting which are widely used, and an understanding of those accounting terms are very much required to have a clarity of the subject which is called accounting. So what happened before recording the transactions in the books? It is very much necessary to know what are the meanings of the terms, because every term which is used in accounting has a specific meaning in the field of accounting. So these basic terms which are used, these terms are called accounting terminology. So let us start the accounting terms. The first one is business transaction. Business transaction means a financial transaction or economic event which is entered into by two parties that initiates the accounting process of recording it in the books of accounts of the business. That is, any transaction which is expressed in monetary terms in the business and which brings a change in the financial position of the enterprise is called business transaction. The examples of business transactions may be introduction of the capital, that is, the money which is introduced by the businessman into business. And if businessman needs some money for his personal use, he withdraws the money. This is also business transaction. Then goods purchased in cash or credit, that is also a business transaction. And goods which have been sold in the market in cash or credit, they are also business transactions. Payment made to the lenders, payment made to the suppliers, cash received from the customers, these all are termed as business transactions. But there are certain events which take place in the business organization which don't bring a change in the financial position of the business. And it's very important to know and pay attention to such kind of events or transactions. For example, an order has been received for the supply of goods. An employee has been appointed in the business organization. Fax message has been sent to a supplier. Received a quotation from a supplier. General manager resigned from the organization. And employees have been interviewed in the business organization for appointment in the different positions. So these all are events, activities, transactions. But these activities cannot be expressed in monetary terms. Hence, these will not fall in the category of business transactions. So there are certain features of business transactions. So the first one, the transaction must bring about a change in the financial position of the firm. Means it must have a value, economic value. And the next one is it involves exchange of goods or services for monetary consideration. And next, transactions can be cash transactions and credit transactions. Goods purchased in cash, it's a cash transaction. Goods sold in not in cash but on credit, this is a credit transaction. Then there can be other type of transaction, for example, external transaction. The transactions between the business organization and an outsider party, that is purchase or sale of goods, this is external transaction. And an internal transaction, the transactions within the business organization, that is the money which has been withdrawn by the businessman or owner for his personal use from the business, this is internal transaction. I hope this will be clear to all of you. The next accounting term which is very important is capital. Capital is the amount in cash or kind invested by the businessman or owner or proprietor in the business. It means capital is not only the amount in cash, no. If the businessman has certain assets, he has furniture, he has a building, along with some cash, he wants to bring in the business those things which are owned by him in the business. So in total, they will be called as capital. So capital increases with additional capital. If after a certain period of time the businessman wants to invest more, that is called additional capital or further capital. So this additional capital will increase the capital of the businessman in the business, and the amount of profit which is earned by the business, that also increases the capital. On the other hand, capital tends to reduce when the money has been withdrawn by the businessman for his personal use. Then his capital will be less because he has withdrawn the money for his personal use. And if the business has incurred loss, so equivalent to the amount of loss, the capital will be reduced. Capital is also known by some other terms which are very important to remember. So the first one is owner's equity, or capital may also be known as net worth, or another term is proprietor's fund, and the last term is internal liability. That is, capital is the liability of the business towards the businessman. Let us move to the next one, next business transaction, that is next business accounting term, that is drawings. Now what are drawings? Withdrawal of money or goods by the owner from the business for his personal use is called drawings. Means if businessman wants to withdraw some money, he can withdraw. And if a businessman is into the manufacturing garments and he wants to use some of the garments which have been manufactured by his business for his personal use, he wants to take some garments from the business for his family members. So the equivalent to the amount of the garments which he is taking from the business for his personal use, for his family members, that will also be termed as drawings. Drawings reduces the capital of the owner in the business. And drawings also include, this is very important, drawings also include any personal expense of the owner paid by the business. For example, payment of the income tax. In case of sole proprietorship form of business, when the tax is paid on the profit, this is called the drawings. And payment of life insurance premium of the businessman. So these two items will be treated as the drawings. Let us move to the next one. Next accounting term is liabilities. Liabilities are the obligations or the debts that a business has to pay at some time in the future. That is, it is the amount which is owed by the business to outsiders or to the businessman also. I repeat again, liabilities are the sums which a business is required to pay to the outsiders or to others. Those sums are called liabilities. So there are two liabilities: internal liability, external liability. Internal liability is that liability in which amount payable to the owner means the amount which is payable to the owner. That is called internal liability. So the capital is internal liability. Because a business is supposed to pay capital, which is a liability, to the businessman. Because business and businessman, there are two entities. Business is an artificial entity and businessman has a physical entity, is a living entity. No doubt businessman starts a business, but when another entity has been started, so that entity is liable to pay the money to whomsoever who has contributed to start that entity. Hence, capital will be treated as an internal liability of the business towards businessman. And the second one is external liability. External liability is the liability in which amount is payable to the outsiders. That is, amount payable to the outsiders is called external liability. External liability arises due to credit transactions. Goods have been purchased from outsiders. Its liability is there to make the payment after a certain period of time. Then loan has been taken from the lenders, from the bank, from the financial institutions. So the amount of the loan is to be returned back. So this is external liability. There are two types of liabilities: current liabilities and non-current liabilities. Current liabilities are those liabilities which are payable within a period of 1 year, or this is called short period of 1 year. In other words, we can say within a period of 12 months. So the liabilities which are payable within a period of 1 year or 12 months, they are called current liabilities, or the sums which are payable, which are required to be paid to the outsiders within a period of 1 year, that is called current liabilities. For example, creditors are there. Creditors are the ones who have sold the goods or the raw material or anything to the business on credit, and the business organization is supposed to pay them within a period of 1 year. Another is short-term loans. Short-term loan is that loan which is taken for 1 year, and within 1 year that has to be paid. This is called the current liability. Second type of liabilities are non-current liabilities. Non-current liabilities are those liabilities which are payable after a period of 1 year. And the examples: long-term loans, the loan which has been taken from the bank or from the financial institutions for more than 1 year, for 3 years, 4 years, 5 years, 2 years, they all will come in the category of long-term or non-current liabilities. Now let us move to the next accounting term, that is assets. Very important term, assets. Assets are the things which are owned by the business. Everything which is owned by the business is called asset. In other words, we may say assets are the economic resources of an enterprise. Those resources which have some value with it and which can be expressed in terms of money, that is called asset. So the examples: land, building, plant and machinery, furniture, stock, cash and bank balance. Or there is another meaning. Assets are the properties, tangible or intangible. Tangible which can be seen and touched. Intangible which can't be seen and which can't be touched. All those properties which are owned by the business or business organization. Another term for the business organization is enterprise. They are called assets. Another meaning is also there. So assets is anything. An asset is anything which will enable the firm to get economic benefit, that is monetary benefit. For example, land, building, plant and machinery, furniture, stock, cash and bank balances, trademark and goodwill. Trademark, the mark of the business, which has been legalized. Goodwill. Goodwill means the image of the business or the reputation of the business. When it is expressed in monetary terms, it is called goodwill. Because over a period of time, every business gets the maximization of the sale on the basis of its good image and reputation in the market. There are three types of assets: current assets, non-current assets, and fictitious assets. Let us move to understand what are current assets. Current assets are those assets which are convertible into cash within a period of 1 year. Means those assets which can be converted into cash within a period of 1 year, they are called current assets. For example, sale of goods. When the goods have been sold in cash, the stock of goods will reduce and the cash will increase. In this way, goods are converted into cash. And the examples of current assets are cash in hand, the bank balance, and debtors. Who are debtors? Debtors are the ones or the parties or the individuals to whom the goods have been sold on credit by the business organization. Now, current assets can also be called by another terms, that is circulating assets or floating assets. Now, second type of assets are non-current assets. Non-current assets are those assets which are held for long-term use in the business. And those assets are not meant for resale. And these assets are held for the purpose of manufacturing and producing goods and services in order to earn revenue or increase the profit earning capacity of the business. They are called non-current assets. For example, fixed assets which remain fixed within the business for a long time. Then non-current investment. Current investments are those investments which are invested for a period of 1 year. Fixed deposit, money has been deposited in the bank for 3 months, maximum for 1 year. That is current asset, current investment. Non-current investments, the money has been invested in fixed assets for more than 1 year. They are non-current investments. And long-term loans and advances. At times, the business organization offers loan to others for long-term period. They are long-term loans and advances. Now, let us understand the meaning of fixed assets. Fixed assets are those assets, those non-current assets which are held for long-term use in the business and are not meant for resale. I repeat again, fixed assets are those assets which are held for long-term use in the business and are not meant for resale. There are two types of fixed assets. One is tangible assets and second is intangible assets. Tangible assets are those assets which have physical appearance and physical existence. In other words, we can say the tangible assets can be seen and touched. And examples are plant and machinery, land and building, and furniture and fixtures. And Intangible assets are those assets which don't have a physical existence. That is, intangible assets cannot be seen and touched by others. For example, goodwill, trademark and computer software. Computer software these days you can't touch, you can't see. But yes, they are the basics of the computers. The computer work on the basis of that. Trademark, the mark of the business, of the trade, which has been legalized from the government. And the third example, goodwill. As I told you, you can't see image, you can't see reputation, but you can feel its value when the image or the reputation is converted into the maximization of sale. By maximization of sale, the profit increases. And the last type of non-current asset is fictitious assets. Fictitious assets are those assets which neither have any real value nor have any physical form. Slightly difficult to understand, please pay attention. Fictitious assets are those assets which have no real value. In the presence, there is no value, and they don't have physical form also. In other terms, we can say these are the assets which neither are tangible assets nor intangible assets. Let us try to understand in a simplified way. Fictitious assets are those expenditures which are not fully shown in the profit and loss account within the year in which they actually take place, but are shown in the profit and loss account in the subsequent or later years. They are called fictitious assets. For example, I'll explain you with the help of example. For example, advertisement expenditures. Try to understand this. In large companies, lot of money is spent on advertisements. The advertisements cost in crores. But is it possible to show? Let us take an example. The advertisement cost rupees 10 crore. So is it possible to show 10 crore in the profit and loss account? Because this is such a big amount. If 10 crore will be shown in profit and loss account, there will be no profit, there will be loss. Hence, to be on the safer side, what the company does, what the business organization does, business organization shows in the profit and loss account only very less amount of the advertisement amount in 1 year, and every year in the coming years, every year a little amount of advertisement expenditure is shown in profit and loss account. So the amount was big, but its benefit will be availed over a period of time. Hence it is said these are the assets which have no real value, which have no physical form, and that's why they are called deferred revenue expenditure. Expenditure, the amount which has been incurred. By incurring the amount on the expenditure, revenue will come. Something will be received, but deferred means it is delayed. But today, this year, in 1 year, the advertisement is helping in increasing the sale, but up to a certain limit. Next year, when the same ad will be seen on the TV, again it will maximize. Next to next year. So its benefits, they are being availed over a period of time. So till the time the total expenditure have been shown in the profit and loss account, till then it is called fictitious assets. I hope this will be clear to all of you. Now these were few important accounting terms which we have discussed today, and in the next classes we'll be carrying on. So just now I wind up the class here. Thank you. Thanks a lot.